In today's video, I'm going to show you my entire 2025 trading plan. I'm not holding anything back, and I'm even going to show you my entry criteria checklist. I assure you this is going to be the only trading strategy video you need for the entire year, maybe forever. For those of you who don't know me, my name is Ara. I've been trading for over 6 years now, and I'm the founder of Currency Pros, which is the logo you see above my computer right now. I take pride in the simplicity of my trading style. I don't think that trading needs to be complicated, and I think most people in the space overcomplicate it just to stroke their own ego and feel important. When in reality, the real battle goes on inside a trader's mind. The actual technical analysis on the charts is incredibly simple, so simple that a child could do it. Now, the reason why most people fail as traders is because they lack discipline. They all know what they should be doing, but they stray away from that path to hopefully achieve quick profits and expedite their trading journey. The reality is it does not work like this, and it's much safer to get consistent base hits rather than trying to swing for home runs. So what I'm going to do for you in this video is show you the entire framework that you need to be a successful trader on the charts. But beyond that, I can't really help you because it's up to you as an individual to stay disciplined and follow the steps that I'm about to teach you. If you're prone to shiny ball syndrome and every time you see a guru on the internet with a Lamborghini, you want to learn their style of trading, it's going to be a long and treacherous journey for you. But if you're willing to stay the course and do what you need to do to be a successful trader, then you're going to really enjoy this video. And my hope is that by the end of this video, you're going to feel so confident in your trading that you don't want to stray away from it. You're going to realize how simple trading can actually be and how little effort it actually takes to be successful at this if you just simply stop sabotaging yourself. So without further ado, we're going to jump into the charts behind me and I'm going to break down my entire 2025 trading plan. Let's get to it. So first things first, if you've watched my 2024 trading plan video, this is going to look a little bit different because I've actually replaced my trading plan with a simple checklist. In the top right portion of my chart here, you'll see the Currency Pros indicator, which has a built-in feature for a customizable checklist. This checklist is pretty straightforward. It has 4 customizable lines and it calculates those lines to provide you with an overall trade score, which is basically a grading system for your trade to make sure that you're only taking the best setups. Now, I'll go over more details on that in just a second, but I briefly want to touch on why a checklist is actually so much more important than a trading plan. Oftentimes, you'll see traders making some elaborate 3-page trading plan with all kinds of obscure details. Every time I see that, I kind of just chuckle a little bit to myself because once you realize how simple trading actually is, you'll realize that all of that nonsense is unnecessary. And it's really just added fluff getting in your way of achieving real results. Now, even from my trading plan video for 2024, the plan itself was extremely straightforward. But I actually removed it and replaced it with this checklist because my plan is even more straightforward than I realized. I have a very specific set of entry criteria, but beyond that, I don't do any form of trade management. I'm not moving my stop loss to break even or taking partial profits or any of that crap. I use the same amount of risk to enter each trade. And with my higher time frame strategy, I don't care about sessions. I don't care about timing. All of that stuff is completely irrelevant to me. So with that being said, what's the point of having some drawn out elaborate trading plan when I can replace it with this simple, subtle checklist that's on my chart at all times, in front of my face at all times, ensuring that I'm only getting involved in the best possible setups and that I'm not straying away from what I know I have to do. So now that I've got that little rant out of the way, let me explain my trade criteria. And then after I do that, we're going to get into some examples. And near the end of the video, I'm going to show you the change that I'm making from last year's video and what I'm going to be implementing in my trading to be a more active trader while still maintaining that simplicity that you're used to seeing from me. So definitely stay tuned for that. You're not going to want to miss it. Now, for the entry criteria itself, as you can see, I have higher time frame alignment, a liquidity sweep, a break of structure plus imbalance, and a 71% retracement. Pretty straightforward, right? So first things first, the Currency Pros indicator tells me whether or not I have higher time frame alignment. At the very top of the indicator, it shows the daily time frame is in discount. Now, I execute these trades on the 4-hour time frame. So for a higher time frame alignment, I use the daily time frame. And all this indicator is doing on the daily time frame is gauging premium and discount price. So of the current daily range, are we above the 50% mark or below the 50% mark? Below would of course be discount, above would of course be premium. So ideally, if I'm looking to sell on the 4-hour time frame, I want the daily time frame to be at a premium. But as you can see here, in this trade example that I'm about to show you, the daily time frame is showing discount. That is a negative confluence. But before we go any further, I want to clarify something. The first 2 line items on my criteria list are negotiable. What I mean by that is that it is not 100% necessary for me to see those items checked off. Now, it reduces my trade score which of course means my probability of success is reduced with those trades. If, for example, the higher time frame alignment and the liquidity sweep are missing, and I only have my latter two checklist items checked off, my trade score would be brought down to 50. So let me pull up the settings and I'll show you what that looks like. If I deselect the liquidity sweep, it's going to put a red X there as well, and my trade score is now 50. That doesn't mean that it is a bad setup, and it doesn't mean that it's going to be a losing trade. What that means is that my probability of success is reduced. So I need to judge whether or not I'm willing to risk my hard-earned money on this trade. When all four are checked off, that is what I call an A+ setup. It gives me a 100% trade score, and that's what I like to see. Obviously, that is ideal, but market conditions aren't always ideal. But for an experienced trader, there is still opportunity there. Now, for a beginner, using the Currency Pros indicator or using their own custom checklist or written checklist physically, I would recommend only taking the A+ setups that fit every single criteria item on your list. Now, let me go back to the settings and deselect the higher time frame alignment, because in this trade example that we're about to discuss, that piece of criteria is missing, unfortunately. Now, the next thing on my list is a liquidity sweep. I've already gone ahead and annotated that right here. And basically, a liquidity sweep is what's more commonly referred to as a fake out. This is basically a false move in a certain direction to induce early buyers or sellers, thus liquidating their money back into the market, which provides fuel for the next move to occur. I put that in very simple terms. I do have a full video on liquidity on my channel, so make sure to check that out if you need some more clarification on what that term actually means. But basically, this here is the liquidity sweep because it was a false move to the upside that didn't actually continue. Now, if it were strong candle bodies closing above this previous high here, and it was just continuing to print higher and higher, I would not classify that as a liquidity sweep. It would be a break of structure. But instead, we wicked out at this level here, showing that price is not willing to go much higher than that. And then immediately after creating these wicks here, showing rejection, we significantly dropped to the downside with a lot of momentum and full candle bodies. Now, that is why my indicator has automatically printed this BOS, break of structure label at this point, because clearly price plummeted through this previous low. So that is, of course, a structural violation. Now, you might notice one more thing that my indicator prints here automatically, and it is these little arrows upon all the structure points. These are just the major highs and lows in price. And I like that my indicator does this because it just simplifies the process for me. I really don't have to think about it at all. And also, that is where the Fibonacci range is based on. So the indicator prints that automatically as well. As soon as a low is printed here and price begins retracing, that arrow will appear and then the Fibonacci range will present itself. So literally all I'm looking for here is once the structure points are solidified and the range is presented to me, I look to see if my entry level of 71% is landing nicely on the imbalance that has been produced. And that leads me to my next line item on the checklist, which is break of structure plus imbalance. We've already established that we had a strong break of structure here, right? And the imbalance is right here. I hope you all can see it because I keep it pretty faint on my charts. It's just that light gray box next to that bearish candle. Now, just to clarify what an imbalance is, the name is pretty self-explanatory actually. There's an imbalance between buyers and sellers. Rather than all the candlestick bodies and wicks touching very closely and being closely consolidated like you can see with all of these, instead, between this candle here, and this candle here, we have a large gap in the middle. It's not necessarily a gap in price, but it was a period of time where only selling pressure was occurring and it was just plummeting to the downside. Now, whenever that happens, and these wicks from the previous candle and the candle that followed that, if they're not touching and filling in that imbalance, that means that it's highly likely in the near future price will come back towards that imbalance to fill it. Full disclaimer, that is just my interpretation of it. I'm not claiming to be the creator of this concept or to know it better than somebody else. This is just how I visualize it and how I process it in my own head. So again, when this imbalance presents itself, it tells me there's a high probability price is going to trade towards it to fill it in. I'm just going to draw it here to visualize the filling in effect. That's what I anticipate price to do. So with that being said, if my 71% entry zone lands on that imbalance or in the general area of it, that gives me a strong conviction that my order is going to be activated. Now, one thing to mention here, in this selling scenario, if the imbalance was located above my 71%, that would be a little bit worrisome. It wouldn't necessarily disqualify the trade, but it's definitely not the best thing to see because, as I said, the imbalance acts as a magnet to pull price in towards it. So if it's above my entry zone, that means there's a high chance that price is going to go past my entry into drawdown just to fill that imbalance. And then maybe it'll go into profit. But at that point, it's so close to my stop loss that it would make me uncomfortable. But in this scenario, the majority of the imbalance is actually below my 71% entry, and that line actually lands nicely on a portion of the imbalance as well. So pretty much everything checks out here. The only thing I'm missing is that higher time frame alignment, which you can see has been deselected from my checklist, giving me a 75 trade score instead of 100. But regardless, it is a valid trade setup to take. So what I'm going to do now is go ahead and play this forward on TradingView's replay mode. I'll show you execution proof though that I actually took this trade, just so you don't think I'm making this up just for the sake of, cherry picking an example for YouTube content. So there you have it. That is the completed trade. It actually just hit take profit this morning, or last night while I was sleeping, I believe. But let me explain the price action that occurred once the trade was activated. You can see that price wicked into the entry zone right here. I actually missed that entry because I got to this opportunity a little bit late. So price was melting into what would have been profit for me. And basically at that point, when I saw this bearish rejection to the downside, I set an order then at the 71% retracement, hoping that price would come back up and sweep liquidity from this newly created high. So just to clarify, this wick right here, I was hoping that price would come back up and sweep liquidity from that high, activating my order that I just placed at the 71% and, hopefully going into profit at that point. So I actually got involved on this wick right here, that bullish candle wick. That's where I was entered into my order. Now, from that point, I experienced some pretty decent profit. It went almost halfway towards my take profit, and then unfortunately reversed all the way back up. Now at this point in time, I'm not gonna lie, I was a bit concerned. Now I don't risk too much on my trades, so if it ended up hitting stop loss, taking out this high, it wouldn't have been a big deal to me. It's just part of the game. But thankfully, price started wicking out right here and then rejecting to the downside. Now, as soon as that wick was formed, and then we formed a bearish candle shortly afterwards, I started to feel a bit more confident again, because I realized price failed to take out this high. Obviously, if it did take out that high, I would have been taken out for a loss. But the fact that it failed to surpass that high shows me that price is not willing to go much higher. So there's a good chance we're going to start rejecting to the downside and continuing from that point on. And of course, as you can see, that's exactly what happened. We left behind another imbalance here actually, but price started dropping rapidly to the downside. And in just under 3 days of hold time, this beautiful trade came to completion. So this trade is about 2.5 R, 2.45 to be exact. Now you can do the math based on your capital and how much percent you risk per trade to figure out how profitable this trade would have been for you. But for me, I really only need a couple of these per month to be totally content. So with this style of trading, less is truly more. You don't need to be intra-session scalping on a lower time frame, trying to catch every single move, getting stressed out, getting FOMO. All of that nonsense is just reducing your quality of life. I prefer to trade like this so I can go do other things. And that allows me the freedom that I desire. And honestly, one of the main reasons I got into trading. I didn't get into trading to give myself another full-time job. I quit carpentry and sold my carpentry business that I had for 7 years to get into trading full-time so that I could have more time freedom and eventually location freedom as well. And that's what this style of trading, that's what this strategy allows me to do. Now, before we move on to the new changes that I'm going to be implementing in 2025, I want to provide one more example of the 4-hour style of trading to really nail it down. So here we have another trade example on GBP CAD, again on the 4-hour time frame. This one I stayed away from because I was already involved in NZD CAD and didn't want to overexpose myself with Canadian dollar assets. However, many of my community members took advantage of this trade setup. I'll show you all some proof of that as well. It was a very popular trade amongst the community this week. So again, the concept here is very simple. We're going to go over the checklist step by step and analyze this position in relation to that checklist. First things first, the higher time frame alignment. On this setup, the higher time frame alignment is present. The daily time frame, as you can see, is in premium, which means it's above 50% of its current range. That's a great sign if we're looking to sell on the 4-hour time frame. So that's definitely a positive confluence right there. Now, next up, we have a liquidity sweep. Well, let's take a look at this for a second. We don't really have a liquidity sweep in the range that we're looking to trade. There could be an argument for this, that there's a liquidity sweep back here. Obviously, that was a false move because price failed to trade higher and eventually broke structure to the downside. But just to be as accurate as possible, I'm going to actually deselect the liquidity sweep from the checklist because in the current range that we're looking at, there was no clear liquidity sweep. As you can see, the range starts from here and goes down to here. Prior to that, there was nothing really to consider. So I'm going to go ahead and open up the settings for the Currency Pros indicator, scroll down to the bottom of the manual checklist, and deselect liquidity sweep. So again, instead of a 100 trade score, this is now a 75 trade score, which is not a deal breaker, but of course it does reduce the probability of success. Now, next up, we have break of structure plus imbalance. we can clearly see we have both of those, right? We saw a very, very impulsive move to the downside, leaving behind a significant imbalance between these points right here. That is a huge sign that price is going to fill the imbalance, which lands pretty nicely again on the 71% retracement. Now, just to clarify, many of you are probably going to ask, why do I use the 71% retracement? Well, I've experimented with a few different levels, and basically it is a rounded up version of an existing number within the Fibonacci sequence. The Fibonacci sequence was not created by any sort of trader. This is something that has been around for centuries. And I actually don't use the Fibonacci tool on TradingView as an indicator. I use it as a measurement tool. So I'm not taking trades based on the Fibonacci levels. I'm just simply framing my stop loss, my entry, and my take profit based on those levels. So I've tried different levels such as the 67%, the 75%, and a while ago I even tried the 79%. I've back tested and forward tested and live tested all of those levels. And I've just found that the 71% is a good balance for me between getting involved in more trades and having a decently sized risk to reward ratio. I just find that the 71% works best for me. Obviously, if you get involved at the 67%, you will have a reduced risk to reward ratio, but you'll get involved in more trades. The higher you go in those Fibonacci numbers and the more you increase that risk to reward ratio, the more trades you're going to miss. So when you do get involved in trades, it's going to be very profitable, of course, but there's almost no worse feeling in trading than missing a trade that ended up going in your direction. So I find the 71% to be a great balance between all of those points that I just mentioned. Now, with that being said, that obviously checks off the next part of the checklist here, the 71% retracement. So all you have to do is set an order with a sell limit at the 71%, put your stop loss at the high of the Fibonacci range, and put the take profit at the low of the Fibonacci range. And at the 71%, that gives a consistent risk to reward ratio of 2.45. So just shy of 2.5. Now that covers the checklist. So let's go ahead and play price forward on TradingView's replay mode, and we'll see how this one panned out. There you have it, a beautiful, beautiful example of the 4-hour swing strategy that is so simple, mechanical, and easily repeatable. Just to answer another question that I'm sure I'll see in the comments if I don't say this, regarding news events. Many day traders and scalpers are very in tune with fundamental news events because they create such volatility in price. There's often what's called a whipsaw effect, which is a spike in both directions before price actually takes its intended course. Now, for day traders and scalpers, I can completely understand why this is a topic of concern, but for swing traders who have stop loss sizes of 50 to 100 pips, it's pretty irrelevant. It is extremely, extremely rare where I am in a trade that is negatively affected by a news event. And what I mean by that is typically the news event just accelerates what was going to happen anyways. It would have to be some sort of unprecedented catastrophic event or economic news release that would trigger the actual direction to change. So again, typically it's just an accelerator of what's already going to happen. So if I lose a trade based on a news event, that trade was likely to lose anyways. And conversely, if I win a trade based on the momentum that was created from a news event, that was likely going to be a winner anyways. It just happened a little faster. But the fact that the stop loss sizes are so large on these swing trades, like this one, for example, is 73 pips. That little whipsaw effect that I was talking about, again, I call it a little whipsaw effect because on the 4-hour time frame, it is quite minuscule. Now, if you were trading on the 5-minute time frame, that whipsaw effect would be catastrophic potentially. But using this higher time frame style of trading, it's just so unnecessary to focus on stuff like that. This is just the ultimate peace of mind in trading. I don't worry about sessions. I don't worry about timing. I don't worry about news. When I see the setup present itself, I set a limit order and just let it do its thing. I don't manage the trades. I don't set it to break even. I don't take partial profits. I've done enough testing through years and years of analyzing data to realize that moving your stop loss to break even after, for example, 1-to-1 profit is achieved is really shooting yourself in the foot. And taking partial profits is diluting the overall value of the trade, which actually skews your overall risk to reward when you really think about it. People have a very short-term way of thinking when it comes to trading, unfortunately. But the fact is, long-term data proves that just leaving the trade and letting it do its thing is the most profitable approach. I can confidently say that, at least with this strategy that I use. I can't speak for others and what they do in their own trading and their different styles of trading, but for me personally, any interference with the trade negatively affects the numbers long term, rather than just letting the trade do its thing. Now, I really like this example. Again, a ton of my community members took this, which I'm super proud of because I didn't even talk about it. My analysis within my group was focused on NZD CAD, And then others applied that to other Canadian dollar assets as well and were able to take advantage of that. So that makes me so, so proud. And it just goes to show you don't need your hand to be held in trading. All you need is the right information, and that information needs to be implemented. That's up to you. So this was a beautiful 4-hour trade example. Let me quickly measure the duration on this one as well. From the point of entry to the point of exit was 1 day and 20 hours. So just under 2 days of hold time. Really can't complain about that for 2.5 hours. If you're risking 1% on a trade like this, that's 2.5%. If you're risking 2% of your capital per trade, this would be a 5% win. Now, if you put that in terms of trading prop firms, for example, risking 2% per trade, you would only need 2 of these per month. And you can easily pass any prop firm challenge and have sustainable, consistent profit in terms of payouts from those firms. I really hope you all enjoyed these 2 examples of the higher time frame swing trading strategy. Now, the best part of the video, in my opinion, is going to be the new changes that I'm implementing for 2025. As I mentioned before, this year, I would like to be a little bit more active simply because I have the time to do so. If I had more travel plans right now or more business endeavors, then I would definitely back off and put more emphasis on my swing trading strategy. However, I have multiple different accounts, multiple different portfolios for different purposes. So I will maintain my swing trading style while also implementing another style that I've talked about quite a bit on this channel. So without further ado, I'd like to dive into that and provide a little more detailed insight on what exactly I'm going to be doing. All right, now let's get to the good stuff. I'm excited to share this with you all. I'm currently on gold, XAU USD, and I'm still on the 4-hour time frame. So let me explain. Many of you who are familiar with my channel should already know where I'm going with this, but I like to use a lower time frame strategy in conjunction with my higher time frame strategy. This helps me be a lot more active on the charts when I'm available. So instead of entering from the 4-hour time frame, I also like to enter from the 15-minute time frame, which presents a lot more opportunities. Now, just to clarify, having more opportunities doesn't make you more profitable, but if you're experienced and you know how to take advantage of these opportunities, then it certainly can expedite your goals. So the reason I'm starting on the 4-hour time frame is of course because that's where the strategy begins. Rather than, for example, in my swing trading style, using the 4-hour time frame for execution and using the daily time frame for a higher time frame bias, in this style of trading, I'm using the 4-hour time frame for an overall bias and using the 15-minute time frame for entry executions. So I'm not going to use any replay mode here. I'm just going to show you where current price is at and everything that happened prior to it. This just played out beautifully this past week, and I want to really break it down for you. So first things first, on gold here, I have a Fibonacci tool placed from this low right here all the way up to this high right here. Now, based on the higher time frame strategy that I just discussed, one way to take advantage of this move is to simply set a limit order at the 71%, put your stop loss to the low of the range, and put the take profit to the high of the range. That, as you can see, for 2.45 risk to reward ratio, obviously would have been a very successful trade. And there's nothing wrong with doing that, as we just went over in the past 2 examples. However, there's a way to take advantage of this even more. Now, let's say you do go ahead and set a buy limit order at the 71% and take advantage of this swing trade. That's all good and well, but let's also say you have a little bit of time on your hands. So you go down to the 15-minute time frame and take a closer look at what price is really doing. So on the 15-minute time frame, we can see that this is where our higher time frame range was tapped into at that 71%. And obviously price started moving in the intended direction to the upside. But within all of that movement is so much more opportunity that actually fits the exact same criteria that we utilize on the higher time frame strategy. So all we have to do here is open up the Currency Pros indicator, scroll down to the bottom where the checklist and higher time frame gauge is located, and set the higher time frame gauge to 4-hour instead of daily. Click OK, and then it's going to update up here. There we go, 4-hour. It's currently in premium, but at the time it was of course in discount. I'm not using replay mode on this. I'm just showing you everything that previously occurred. So it's now at premium because it's at the top of the current range. Basically, the premise here is while you're taking advantage of those higher time frame swing trades that we previously discussed, let me just fix this up a little bit, and I'm going to pull it back here, get it out of the way. While you're taking advantage of that, you can start to pay attention to all the little structural developments that happen in the meantime. Now, I'm going to save us all some time here. I've already drawn out all the valid Fibonacci retracements. So let's take a minute and study them. After price tapped into the higher time frame zone and started pushing to the upside, that initial bullish move didn't see any structural development. We didn't break through this high. We didn't have any internal structure that could be broken yet. So within that first bullish move there was nothing to really consider. However, price started consolidating, creating some minor lows, and then it started breaking through previous highs. It didn't quite get there here, but then it consolidated again and then pushed significantly higher. So this push right here broke through this high and it broke through this high. It's still not the overall high up here, but it's still some internal structure that can be taken advantage of. So all you have to do is draw a fib tool there or let the Currency Pros indicator do it for you in real time. And price, as you can see, retraced to that 71%, a bit deeper actually, and then absolutely destroyed the target. So let me just set up a long position here so we can all visualize the same thing. Stop loss at the low, take profit. There's two options for the take profit. I'll go over that in a sec, but for now, let's set it to the Fibonacci high. So that's the first trading opportunity. And as you can see, it came to fruition very quickly. This is on the 15-minute time frame. So that took just over 4 hours. As price broke through this high right here, we can solidify this as the new low that's been created. And as soon as price kind of tops out and stops trading higher, then we can solidify the high of the range as well, which ended up being here. Now, again, all you have to do is draw the Fibonacci tool between those two swing points, or let the Currency Pros indicator do it for you. And we cross-reference all of these opportunities with our trading checklist, of course, right? Some of them might be missing liquidity sweeps, but overall the higher time frame alignment is intact, and we have clear breaks of structure and imbalance throughout all of these opportunities here. Very clear imbalance within this candle here, clear break of structure to the upside. Now, again, we have a break of structure right here to the upside. Within this bullish range, we can clearly spot multiple areas of imbalance. There's imbalance here, there's imbalance up here. So multiple different areas. The indicator isn't going to show that now because it's already been mitigated and price is way further along. I'm not in replay mode. But once again, all you have to do is set a buy limit order at the Fibonacci parameters of your choosing. Let's just set it up. Entry at the 71, stop loss at the low of the newly created range, take profit at the high of the newly created range. And let's just zoom out a bit so we can see what happened here. Eventually, that take profit was hit right about there. Now, this trade had a duration from start to finish of, let's see, just under a day, 23 hours. So again, not bad, especially considering the fact that you're still holding this swing trade. So now you have that swing trade and you're compounding other trades into it. This is the only time where there's some trade management, okay? If you're stacking positions, then you do have to manage your stop loss accordingly. So in this scenario, you would move the stop loss of the initial swing trade to break even. This is, of course, because if you're risking 2% on a trade, for example, and then you enter 2 more, well, that would then be 6% risk, which if that goes against you, it doesn't go in your favor, that could severely impact your capital, or it could violate the consistency rules of a prop firm that you're trading with. Obviously, we don't want those things to happen, so we have to manage our risk accordingly. This is the only time I do stop loss management, is when I'm compounding and scaling into trades. So again, at this point, your initial trade would already be set to break even, which would mean there's no risk on that trade. You just transfer that risk to the next position. Same thing happens when you enter another trade. You move this trade's stop loss to break even because you're transferring that risk to a new position. So all you're doing is transferring that initial risk that you started with, but the profits are compounding very significantly. I've done videos on this in the recent past, and I've even showed you live execution proof on MyFX book. And how that actually looks and how significantly it can compound. When I'm risking 2%, my trades are netting just under 5% basically because my risk to reward ratio is 2.45. But when I'm scaling in like this, I mean, the profits can compound to 15%, 17%, 20%. It depends how many opportunities are available. Speaking of which, we have another one here. So I'll scale this back to get it out of the way. And let's take a closer look. There's another Fibonacci range here. Technically, there's another one that I didn't even mark out, but this one would be quite risky and it would have almost hit the stop loss if you traded that range. But the more clear, definitive range here is this one that I've already drawn out. So this had a very clear break of structure right here. It left behind imbalance in multiple areas. There was imbalance here, and there is a little bit of imbalance left down here. So that's a good sign as well. So the structural bias here is very definitive. So again, all you'd have to do is set up a long position at the 71%. Let's line it up here. Stop loss at the low, take profit at the high. And again, this one hit take profit as well. The reason you can have such high conviction in these scale-in trades is because of the overall bias that you established on the swing trade. Again, going back to the 4-hour time frame, the bias here would obviously be to the upside, right? We have a retracement back into discount price, mitigating imbalance. And so the objective is for price to take out this high right up here. So during all of these scale-in opportunities, if this high has not been taken out yet, then of course that bias still remains intact and you can continue to ride that trend until the objective has been completed. So going back to the 15-minute time frame, I hope you all are following along with this, because this is some powerful stuff that I'm discussing here, something that people charge thousands of dollars for typically. So let me just zoom in a little bit closer. Now with this trade right here, you can see that it wasn't actually hitting the swing target just yet. So it kind of topped out here, retraced, gave another opportunity for entry, and then it was right here where that target was finally met from the swing perspective. Now, with that being said, anything you do after that is, of course, increased risk. You're betting on that trend continuing. So this would be an example of that, right? The target was already taken out on the higher time frame, but there was still a trading opportunity to go long once more. And it was a valid opportunity. But to be clear, these two were the safer ones because, of course, the target was not taken out yet on that 4-hour time frame. Now, with that being said, I'm going to delete this one and we'll just include these two for now. But I want to show you how significantly the profit can compound if you follow this one simple rule. So of course, on the 4-hour time frame, if the overall objective was to take out the high that we set up here, this is where that take profit is set, then even though you're entering these smaller trades based on a Fibonacci range, you can have that smaller stop loss based on that range and actually drag your take profit to where the original take profit was. Again, if the overall higher time frame objective is to take out that major swing high, then there's nothing wrong with setting your target on the scale-in trades to that same level. And what that does, as you can see, is drastically improve the risk to reward ratio. We went from 2.45 to now 9.1. So that is a huge improvement. And that's how you can compound these profits so significantly. So this is just one example. There's a lot of other examples where there could be 3 or 4 different scale-ins within the overall range of the swing trade. So I'm really hoping that this is opening your eyes to the potential of utilizing this very simplistic mechanical strategy. I'm going to give you guys one example that isn't on gold, and maybe it'll give an even better perspective. And if you've made it this far, guys, I applaud your efforts because this is a lengthy video. Do me a favor, like the video and comment down below. And make sure to subscribe if you haven't already, because throughout all of 2025, I'm going to be providing very valuable videos like this that, again, people charge thousands of dollars for. And you might be wondering, Ara, why are you willing to give out all of this information for free? The reason I'm willing to do that is because I did not invent these concepts. I am not the founder of these concepts or this style of trading. I have, of course, personalized it, but again, I did not invent any of this. Furthermore, my value that I offer others is found elsewhere. For example, within the Currency Pros community that I've been operating for the past few years, I provide weekly ongoing content, weekly analysis, weekly recaps, weekly live sessions, and so much more. In addition to providing tools for traders such as the Currency Pros indicator and some other upcoming developments that I'm excited to chat about soon. So these things that you're seeing on the chart are not proprietary. So again, my value is found elsewhere. I'm happy to provide this content for free on YouTube for those of you who can't afford further mentorship or education. Not everybody is in the financial situation to invest in further education, and that's totally fine. You can utilize free concepts such as this on YouTube or Google or wherever and implement these concepts immediately and make profit in the market on real money or prop firm capital. And you can use those profits to then further invest in education if you so choose. Now, with that rant out of the way, let's get into another trade example. All right, I need to take a little coffee break, but let's get back to it. This next example that I wanted to show you hopefully will provide a different perspective, because I know a lot of you don't actually like to swing trade. I know it doesn't resonate with everybody. It takes a great deal of patience, and that just simply doesn't work for everybody, and I completely understand that. So to add on to the more active style that we just started discussing, I wanted to show an example where you actually don't need to be in an existing swing trade and scaling into it in order to utilize these techniques. So this is a great example of that. USD JPY, we're starting out on the 4-hour time frame just to get the overall bias, and then we're going to jump down to the 15-minute time frame. The example I'm about to show you is applicable on any asset, any day of the week. You don't need to be in an existing swing trade. You can just open up your watch list in the morning or whenever you get to your trading desk. And as soon as one of those assets meets all your criteria, you can take the trade. So let's break this down. On the 4-hour time frame, we are clearly trading at a premium right now on USD JPY. This is obviously so overextended to the upside, right? So looking for buying opportunities, is certainly possible, but it is of course inherently risky. What I would prefer, as the 4-hour is at a premium, is to look for selling opportunities on the 15-minute time frame. Now again, looking for sells on the 15-minute time frame gives me that higher time frame alignment because I already have established that the 4-hour is at a premium, which is confirmed by the Currency Pros indicator. So now of course on the 15-minute time frame, I'm looking for some structural confirmation to the downside to signal potential trading opportunities. Well, we can tell that that's already actually happening. Let me just draw a simple trend line here, and you can start to visualize what is being now violated to the downside. We were seeing these consistent higher highs and higher lows, and now the trend is being shifted to the downside. Now, I'm not a trend line trader. I just put that there so you can visualize how the sentiment is shifting to the other direction. What I'd like to do now is annotate where the first break of structure occurred, in my opinion, and that would be right here. However, I don't think that's significant enough to actually take a trade on. So you technically could have, if you drew a fib tool from here to here, then that actually would have been a very successful trade, as you can see. But to take that first shift in structure after such a significant bullish trend that's gone on for so long is incredibly risky. Even though that was the first valid break of structure, I'm going to delete that and we're going to focus on the next range that just followed, because this to me is a much more clear break of structure to the downside. And that's basically a confirmation of the move that just happened prior. And this is the second break of structure, which really signals a bearish trend forming. So before we get too ahead of ourselves here, let's take a look at the Currency Pros checklist. We have that higher time frame alignment. We've already confirmed that. Now, next up on the list is a liquidity sweep. To be honest, I don't see a liquidity sweep here because this is the major high right up here, and nothing poked past that with like a candlestick wick. There was no violation of that structure. So I don't see a liquidity grab there. You could argue that liquidity was swept here, but that's a tough argument to make because that's pretty insignificant consolidative structure as it is. So I'm not really concerned with that. This high here did not surpass this high here. So I don't see a liquidity sweep here, but that's not a deal breaker. However, we have to be accountable for what we're getting ourselves into. So let's open up the indicator settings and deselect liquidity sweep. Now the red X has appeared next to the liquidity sweep line item. It brought the trade score down to 75, unfortunately, but I still think it's a valid setup. So let's go through the next items: a break of structure and imbalance. We certainly have those. Let me just zoom in a bit further. We can obviously see that break of structure there. Actually, I think my indicator is turned off at the moment. Let me turn back on break of structure. There we go. It's showing it automatically there. So we clearly have a break of structure and imbalance. The imbalance is this gray box right next to this dark gray bearish candle. And as I stated before, guys, the break of structure and imbalance is the most important here. That combined with the 71% retracement makes for a high quality setup. The understanding of market structure is so important. Obviously, we want to see that higher time frame alignment as well. And a liquidity sweep is just the cherry on top. But those two are negotiable. As long as the break of structure and imbalance and the Fibonacci range with the retracement make sense together, then it's a high probability trade. So let's go ahead and drag our Fibonacci tool from the top all the way to the bottom. I want to do it manually to show you guys how easy it is. You don't necessarily need the indicator to do it for you if you don't want to use an indicator. Obviously, it makes it a lot easier when it just prints for you automatically, right? I'll delete it for a second and show you guys what I'm talking about. If I enable the Fibonacci levels on the Currency Pros indicator, it will any second now automatically print that range based on this high and this low. And it will continue to do so as price develops in a certain direction. It will continue to print new Fibonacci ranges that you can take advantage of. But just for the sake of education, I'm going to turn it off and just show you guys how you can do it manually on your own if that's what you prefer. So again, swing high all the way down to swing low. The structure arrow is not showing up there because it needs a few more candles to develop in order to solidify that low. But sometimes on the 15-minute time frame, these ranges are pretty tight, so there's not always time to wait for that arrow. In this case, price is obviously retracing back into the premium of this bearish range, so we can consider this a swing low. And this is the swing high. So that's where I've dragged and dropped the Fibonacci tool. Very lovely to see the 71% lands perfectly on that imbalance. As I said before, that's a huge confluence for me because it's highly likely price will fill that imbalance, at least for the most part, which means there's a great chance that my order will be activated. Speaking of orders, let's go ahead and set up the short position tool. Entry at the 71, stop loss at the high, take profit at the low for a 2.45 risk to reward ratio. Let me just adjust that. No, okay, it'll be 2.44. On the 15-minute time frame, there's a little bit less wiggle room with the pips. So 2.44, let's play price forward and see how it goes. All right, that was quick, very quick TP there. Let's just measure it. From start to finish, 45 minutes. Guys, that's fantastic. This is the 15-minute time frame. You're not worrying about that 1 minute to 5 minute noise. The 15-minute time frame is very simple and easy to understand. And if you pair it with that higher time frame bias, more often than not, you're going to be on the right side of the market. And of course, that's what we want as traders. Now let's continue to play price forward and see if there's any more opportunities that arise. So there is, let me just hide this for a moment. We have a nice swing high forming here because it was responsible for a significant break of structure to the downside. However, we haven't bottomed out just yet. It's still moving bearish to the downside. So I can't confirm a low. Let's continue playing it forward and see if, yep. Okay, so there is a retracement right there. So we can go ahead and drag a new Fibonacci retracement tool from this high right here, all the way down to this low right here. This is another valid setup, but the imbalance isn't exactly where I'd like it to be necessarily. I don't like when the imbalance is above my entry zone. In a selling situation, of course, I prefer if the imbalance was below my entry zone. But this is still a valid setup in my opinion. We're clearly moving to the downside now, violating this previous bullish trend and all of these lows that occurred previously. It's looking good, and I'd like to set up another position here and see how it goes. So we're going to set up a short position at the 71%, stop loss at the high, which gives us 16.5 pips, pretty reasonable. Take profit at the low for 40 pips. So let's play price forward again. Okay, so right there would have triggered the entry. Okay, significant drawdown there. Let's see what happens. Okay, hits TP. So this one went pretty deep, but still valid trade, valid setup, hit take profit. So as you can see, you don't have to be involved in an overall swing trade initially in order to take advantage of this style of trading. You can be a more active and aggressive trader while safely managing your risk and sticking to a strict checklist of entry criteria. And that's what I've demonstrated here today. There's two different styles to apply this strategy. You can do the higher time frame, easy, less stress, less chart time approach. Or if you have some time on your hands, maybe you are a full-time trader, or maybe you're a stay-at-home dad, a stay-at-home mom, you work from home on another business, then this style is for you. You can be a little more active while still being anchored to that higher time frame bias, ensuring that you're on the right side of the market more often than not. I really hope this example and all of the other ones provided a lot of valuable insight for you. This is how I'm going to be trading all of 2025. So as I mentioned before, I have multiple different accounts for different purposes. I have a couple swing trading accounts and a couple day trading accounts. Low risk and high risk for each of them. So I'm going to be taking my swing trades as usual on the respective accounts, but I'm also going to be pretty much doubling down on this style of trading as well because I have the time to do so. I'm a full-time trader. I work from home, obviously. I can work from anywhere in the world as well. So even when I'm traveling, I'm able to do this. And in my opinion, it's a good hybrid strategy. If you're not too into swing trading, if you don't have the patience to hold, potentially up to a week or 2 weeks for your trade to go to completion, then this might be a good solution for you because on the 15-minute time frame, a lot of these trades are within a day, or sometimes they last 2 days, maybe even up to 3 days, something like that. The average hold time is pretty reasonable. So in my opinion, it's a great balance between hyperactive day trading and swing trading. It's kind of just right there in the middle that would suit pretty much any lifestyle and could even be worked around a full-time job, to be quite honest. I could do many other things while still trading this style. Again, I really hope you guys enjoyed this video. I put a lot of effort into these types of videos and I'm trying to provide as much value as I possibly can. I see in the comments of each video that this content is changing lives, and that honestly encourages me so much. It keeps me going. So please continue making those comments, guys. I read all of them. I might not respond to every single one, but I know what you guys are saying. I know the feedback and I'm so tremendously grateful for it. I can't even express it in words. Every single one of you who is subscribed to this channel, you really mean the world to me. I appreciate all of you watching this content, and I'm so grateful that it's actually helping people and being well received. I hope each and every one of you has a wonderful 2025, and I know that this video, if you let it, will change your trajectory in your trading journey. You don't need to keep watching these strategy videos from different content creators all the time, switching things up, trying new things. Find something that works and stick to it. Trading is actually a lot simpler than people make it out to be. The real battle, as I said earlier, is in your own mind. The chart work is kid stuff. It's not complicated. It might take a few months to grasp it if you're brand new to things, but after, 6 to 12 months or a couple years, it's second nature. I don't even think about this stuff anymore, and even more so that the indicator prints everything for me. I don't think about any of it. I focus all my efforts on just decision making and maintaining a healthy lifestyle so that my mind is capable of consistency. If you guys want to be successful traders, you have to take care of yourself. You have to get enough sleep. You have to eat healthy. You have to exercise. All of those things play a part. It might seem trivial to you. You might think that you can just spend as much chart time as humanly possible and become a successful trader. But if you neglect other aspects of your life, then your mental state will suffer. And if your mental state suffers, you will not be able to make proper decisions on the charts. I've personally neglected this in the past, and I'm now speaking from experience. So please take what I say seriously and try and implement it in your own life. I look forward to seeing what you guys have to say, and I'm even more excited for many months from now or at the end of 2025 when you guys come back to this and let me know how you performed this year using these concepts that I've taught here today. Again, thank you all so much for watching. Let's crush 2025. Let's have a wonderful, positive year, and I'll talk to you all in the next video.